Hello everybody, Steve Griffiths here, developer of the MT Predictor software program. I'd like to welcome you all to today's MT Predictor training webinar. Before we start, we have to look at our risk disclaimer and just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and do unfold no matter what trading approach you take. There always will be losing trades. Excuse me. Right, so today I would like to have a look at our W3 or Wave 3 trade setup. I haven't had a look at this one in a while. So there was a good example unfolded on a slightly longer time frame chart of crude oil. This is a June contract of crude oil I have here. If you're looking at the front month one, there's exactly the same setup there. So this is a front month continuous, but I'll work on the June contract. Right, so what is our Wave 3 or W3 trade setup? It's the one you can see I'm circling up here. Well, a W3, as the name suggests, is a Wave 3, and it's designed to catch the Wave 3 swing. So if I right mouse click over this red cell bar, do analysis, you can see this is the trade setup we're looking to capture. We're looking to capture the Wave 3 swing. Why do we like the Wave 3 swing? Well, we like it because it's normally the strongest and longest in a completed 5-wave sequence. So let's explore this a little bit more. Right, for you guys who are new to MT Predictor, you can see we have other setups on the chart here. So do we take these setups as if it's a black box system, i.e. if it's a 100% mechanical system, perhaps in the direction of our MTP trend color, which is blue for up, red for down, and black for in the process of making a reversal? No, we don't. And we don't for the reason I reaffirm every week, in that markets are random half the time. So if you guys have been trading for any length of time, you should have probably seen it yourself, that basically half the time the markets are just basically random. You can't really ascertain what they're doing, what the picture is. It just, it's just unclear. So at MT Predictor many years ago, I realized that what we need to do is we need to only focus on when the markets are clear. In other words, when there's only a clear pattern. And for this, I developed my unique isolation approach to Elliott Wave. And I think this is why Elliott Wave falls down so much as taught when you read traditional books. In that Elliott Wave was originally designed to be a forecasting tool. The idea being is if you knew where you were in the sequence, 5 waves impulsive, 3 waves corrective, then you knew what the next swing was. Because all the waves sit within other waves, smaller within larger, larger encompassing smaller, the whole pattern fixed together, and you know where you should know where you are. That's fine in theory. Don't know about you guys, but if any of you guys have tried to look at this in practical markets, you'll know it falls down fairly quickly. So many years ago, I realized that the reason it falls down, or the reason I think it falls down, is because markets go into a random period. So how do we then start to look at that if markets are random half the time? Well, to start with, we go to a higher time frame chart. It's always good to look at the trades you're looking at in the context of the higher time frame. So for a 15-minute chart, the higher time frame, I'd go out to the hourly chart. If you're, say, doing a 3-minute chart that we look at a lot on our E-minis, you go out to a 15-minute. If you're, say, trading daily charts, you go out to a weekly for the higher time frame. So then we use our DPs on the chart. So I just want to use trading mode here. I want to go back a little bit in time, back to here somewhere, and have a look at this chart here. We have done quite detailed webinars on what pivots to choose to do your DP. So if you're new to MT Predictor, I do recommend you have a look in the customers section of the website to then review those particular webinars that are describing which particular pivots to use, because that's important to understand which pivots. We don't use all of them, we use specific ones. So here you can see that fairly obviously the last major swing pivot high is back here, isn't it? Can you see that? There's a pretty major swing pivot high. So we right mouse click here, we do decision point. That gives you an area of potential resistance as the market's going up. But the important thing is, can you see how this is on the chart in advance? This is the thing about MT Predictor. We are leading indicators. We don't react to scanners. We don't react to market analyzers, because you're forever going to be behind the curve there. What we do is we're anticipating, you're planning, you're getting ready for. Now, the markets don't always do what we anticipate, and we covered a lot of that in the last couple of weeks when we were looking a bit about the psychology of trading. But you see the idea, particularly if you're new to MT Predictor. Once you've got your DP on the chart, you don't then project that the market is going to get there, because it could become random in between. What you do to wait to see if it gets there. So let's just turn trading mode off, and can you see how the market did indeed get up to this level here? It got up to that level and then made a reversal, started to come down. When a market is doing what you anticipate, in other words, it's reversing at the level you've projected in advance, then you deem the market is clear. In other words, the market pattern is clear. So effectively what I'm doing is I'm effectively taking a line in the sand here. Do you see that? I'm saying, right, at that particular point in time, I'm saying the market is now reversing off the high. Therefore, the market pattern is starting to become clear. So that's where I say, right now, I'm going to start to look for Elliott wave patterns. That's where I start my sequence. So do you understand what I'm doing? So I'm basically waiting until the market is making a reversal at the higher time frame DP. I then draw my line in the sand. And I say, right now, I deem the picture's clear. I can now start to look for Elliott wave patterns. So let's now go down to the time frame we're looking at. So 15 minutes. We go back a bit. Perhaps I'll just use training mode to come back a bit here. So this is what you have. There's the market gone up into the higher time frame resistance. The market started to retrace back down. Our MTP trend has gone grey to show us we're in the process of making a reversal. Sometimes it will be red as it rolls over. We're now starting to look for, well, will we be looking for buy setups or sell setups? If now we deem that the market's at a resistance, we'd then be looking for sell setups, wouldn't we? Because the market trend is now coming down off this reversal. So we'd be looking for sell setups. So if I go forward a bar, here you can see that we have a sell setup. So the basic concept is that, can you see now how the picture is deemed to be clear because the market has made a reversal at our anticipated high? The MTP trends agreed with that. Notice how I use the MTP trend second after the DPs. I don't look at the MTP trend first. That's a confirmatory indicator. It's all about what the market is doing at the DPs first and foremost. Therefore, this looks to be a good trade setup. So just at the basic point, that would be a good one to consider. What's special about this particular one? Well, it's special because in Elliott wave terms, if we've drawn our line in our sand here, perhaps I'll put that line back on again. There's our line in the sand. That's where we start. The initial move off an important high or low, so the initial move in Elliott wave terms would be a wave 1. The initial correction would be a wave 2. So if I right mouse click here, do Elliott wave intermediate, it gives us a wave 2 or B because it could be a wave C. But in this particular context, because that's a higher time frame resistance, this would be a wave 1, this would be a wave 2. So that gives you the broad area of where a wave 2 is likely to end. What is very specific about a wave 2? Well, a wave 2 is not only the first correction against the first move of an important high or low, but also in Elliott wave terms, wave 2s typically unfold as ABC patterns. So if I right mouse click here, in this particular one, because this is a TS1 trade setup, if I do Elliott wave minor, can you see how we have an ABC correction in that wave 2? This in Elliott wave terms is the most common pattern to unfold in a wave 2 correction, an ABC minor pattern. So can you see how at this particular point in time, everything has come together to say that this looks like it could be the end of a wave 2? Because we've come off higher time frame resistance, we've made the initial move down, the initial correction, and it's subdivided into an ABC. So that's why we paint that as a wave 3 or W3 trade setup. If we now place the analysis on, the thing I like about these is because this is the end of a wave 2, and we're anticipating or projecting that the next move is going to be a wave 3 or likely to be a wave 3. Wave 3s are typically the strongest and longest in a completed 5-wave sequence. Therefore, they have the largest profit potential in relation to the initial risk. Here we use position sizing to keep the initial risk small and under control. But can you see how if you were taken into this trade, which you would have been on the next bar, if that had gone back up again and stopped you out, it would have been what we call a -1R loss, a 1 risk unit loss. In other words, you would have a losing trade. Losses can and will and do unfold. That's a part of trading. Every trading approach has losses. So this would be a -1R loss. But the reason I like this W3 trade setup is why it's one of my favorites, is because we're anticipating a strong move. The profit potential is very likely to be large, not just in dollars, but in risk reward units. This is the important thing. So you can see here, the potential profit was, can I call that 14, 13.5, 13.9 really, isn't it? But approximately 14 times or nearly 14 times the initial risk. In other words, you can make 14, we'll call it 13 a bit trades, losing trades, and one profitable trade would have more than made up for them. So this is why I like this, is the profit potential is large in relation to the initial risk. If I turn trading mode off now, let's see what the market did. Well, it did indeed do this. It did carry on down. Obviously, you wouldn't be looking at that buy setup, would you? Because the MTP trend is blue and it was coming off this high time frame resistance. So the market came down into the projected target where a profit of almost 14R was available. So that's why I like these. And actually, if I now actually put the larger pivots on, the major pivots, just going to make them a bit more weighted so you can see them. This is what the pattern we had. So remember I said that that was the start of the sequence. There's my line in the sand. The initial move down would be wave 1. We're then looking for a minor ABC correction into wave 2. That we're projecting to be a wave 3. Wave 4s are typically choppy and horrible, so they're not very nice to trade. Then a move down into the new lows to then complete the sequence. And if I actually right mouse click here, do Elliott Wave Major, you can see that's exactly what we had. Can you see the pattern now? See the whole pattern. There's wave 1, there's wave 2, subdivided from ABC. If I place the analysis on, here's the wave 3 that we're looking to take the chunk out of. So that's the bit we're looking to trade. And as you can see, that indeed was the longest swing, wasn't it? There's your wave 4 correction. Excuse me. Here's down into the wave 5 low. That's where the sequence terminates and then started to rally back. So can you see now why I like this particular W3 or wave 3 trade setup? Because it has the ability to take a big chunk out of what is potentially the largest swing in a completed 5-wave sequence or in an impulsive move. So I just wanted to share this today because, you know, that's an absolutely beautiful example of what the wave 3 or W3 trade setup is all about. Incidentally enough, if we go out to the higher time frame chart and we put on the DP for the potential target as well, okay, that's our 50-minute resistance. If you guys who've been with us for a while will know that that was the high, wasn't it? This was the last swing into the high, wasn't it? We're using the intermediate degree swings now, so ignore the blue one. This is the intermediate degree swing into that high. So the initial move off that high is likely to end from the DP from that last swing. So this is the pivot we take. Remember, we covered this a couple of weeks ago. So we right mouse click here, do DP. Remember how these are on the chart in advance. So let's have a look now at how that looked on the 15-minute chart. And as you can see, there is your wave 3 or W3 trade setup that was basically going down into that higher time frame support. So it did actually work out really nicely that your trade setup was sort of sandwiched between higher time frame resistance and higher time frame support. So can you see how the picture was beautifully clear? The market actually did carry on down to wave 5, and if I actually do a DP off it, I'll go back to the hourly chart. So if I do a DP off this last pivot low here, it actually came into double DP support down there, didn't it? So if I come back to this chart, can you see how that came in at the low there beautifully as well? I'll have a look at that in a second as well, because I just want to see if there are any questions you have on the W3 trade setup, and any questions on that particular, on what we're looking at here, in that way, the way we look at the higher time frame resistance or higher time frame support and resistance, depending which way you're going, to then draw the line in the sand to start your Elliott wave sequence. How the initial move will be wave 1. You're then looking for an ABC correction into wave 2. You're then looking to trade the wave 3, which is normally the strongest move in a completed 1, 2, 3, 4, 5 wave sequence. So this actually example encompasses the W3 trade setup really well. So are there any particular questions on the W3 or wave 3 trade setup as I've looked at here, or can you all see what we're looking for, and particularly why I like this W3 setup, why it's one of my favorite setups? Yes, Alvin, we always tend to use our intermediate swings. Yeah, we always use our intermediate swings. The only reason I kept the major swings on is because I knew when I came back to the 15-minute chart, I just wanted to show that 5-wave sequence. That's all. So yeah, we use the intermediate swings to do the DPs. So that's a really good example on the W3 trade setup. Interestingly enough, I'm just going to take the large pivots off, which I think was actually amazing on this particular example here. Just take those off. Is that here we came down into support at our higher time frame support, didn't we? So our higher time frame support, we had a 15-minute or a VS setup on our time frame we're looking to trade. There's our VS setup there. This is another one we looked at, was it last week? And another one of my favorites. They're my two favorites, the wave 3 and the VS or volume spike. We had a look at this last week. So that's where the professionals come in to then move the market, because it's a fake out on high volume beyond an important psychological high or low. So you can see this is definitely a breach of an important psychological low. If I right mouse click, do the analysis, there's your trade setup into that first target there. But what I thought was amazing is if I go back to the hourly chart, just clear everything off here. This is what I thought was absolutely amazing, is that if we look at this in a bit more detail, here's our 5-wave sequence down here, isn't it? That's our 5-wave sequence gone down to that low. What do we know about the targets to use after a completed 5-wave sequence? I did touch on this last week, and Mazir, you'll know the answer to this because you've been with us for a while. And I thought this was actually quite amazing, really. Is that there's the wave 5 low, the initial target. Okay, I'll just do this just so we go back in time, so we don't show, in hindsight. There's our completed 5-wave low. The initial target would be the DP from the wave 4, which is there, isn't it? That's the initial, well, that's the last swing into that low, isn't it? But what I thought was amazing is the market did actually come up and go through it. What do we know? Alvin, you're one step ahead of me. I like that. Do I repeat myself so much each week? Hopefully repetition is how you guys learn, and how we do the same thing week in, week out, month in, month out, year in, year out, decade in, decade out, because the markets do repeat themselves. And this is what you need to do, not keep changing your goalposts. You need to doing the same thing. So if we go beyond that DP, we then go back to the start of the complete sequence. In other words, not this wave 2 high. We go back to the start of the sequence. We right mouse click, we place our DP on. This would be then the potential target. And what blew me away when I was looking at this is if I exit the trading mode, look what the market then did. It went from that through that, but look where it stopped. Look where the wave stopped, right at that higher time frame resistance. So if I now go down to the 15-minute chart, what I can do is, if you were a bit more aggressive, rather than looking to come out at this first target, you can say, well, actually, I'd want to go up to the higher time frame or the next target up to then increase your profit on that VS trade, because you know that that's going to be a potential larger swing. So actually, that's the second trade setup that I like very much, a potential VS trade that tends to have a large swing. And that was actually an amazing result there as well. But of course, it would be lovely if the markets did this the whole time, wouldn't it? It would be absolutely, beautiful if basically you had the markets doing perfect patterns the whole time. They don't. And that's why so many people struggle, because before this, the markets are a bit random. I'm guessing after this, the markets might be random as well. But what we have is we have snippets, in here and then up to here where the picture's absolutely perfectly clear. So that's the whole idea of MT Predictor. What we're looking to do is we're looking to work with the market, doing the snippet when the market's clear. In other words, it's like driving in fog. Suddenly the fog moves and you've got an absolutely clear picture. Suddenly the fog comes down again and you're all confused. But of course, like this low here, where did it start from? Well, it started from that DP down there, didn't it? So can you see how that low was a clear picture because it came off DP support? If I want to do the DP off there as well, double DP support. So that was a clear picture. This was a clear picture. Before it, the market was random, in other words, not clear. So this encompasses what we try to do with MT Predictor. And hopefully you can see now why I designed my isolation approach to Elliott Wave, and that why I like to look at the markets just when you have a clear picture, but totally understand, but more importantly, accept. This is the main thing that I think so many amateur traders never do. They accept that half the time markets will be random, except that when you're back here somewhere, look at this, look, it's just, what on earth is going on in this part? What I can't understand is why on earth people invented X waves and complex waves and alternate counts with Elliott Wave, as they did it just to try and fit a pattern into this complete and utter mess. Now, to me, I just think it's absolutely bonkers, if I'm allowed to say that, why you'd want to try and do such complicated stuff just to try and fit stuff in on a market pattern that's so complicated you couldn't do any trading on it anyway. Doesn't it seem so much more sensible just to say to yourself, hey guys, look, that's random. I don't know what's going on there. I just really don't. I don't want to be a part of it. I want to stand aside. I want to just ignore that randomness. And then once the market gets up to or gets into a level like here, gets into a level here where it's making a reversal off our projected level, again, that's projected in advance, we then deem, hey, the market is starting to do what we anticipate. Therefore, let's start to pay attention to it. And that's where suddenly the picture becomes clear. And within that, then we can then say, right, now it's clear. We'll now start to look for Elliott Wave patterns. And why on earth would you want to say Elliott Wave doesn't work when you can have trade setups like this, where the profit is almost 14 times the initial risk? It's like the old phrase, I don't know whether you've got that in America, but in the UK, we have a phrase saying, throwing the baby out with the bathwater. And this is what so many people have done with Elliott Wave, is they've seen the confusing part. They've said Elliott Wave doesn't work. They've chucked the whole lot out. And because of that, they've missed trades like this that I think are absolute beauts. Yeah, Mazir, you're dead right, is that human nature is that we want to control everything, don't we? We can't accept that we're not in control sometimes, that the market is actually random and we don't know what's going on. But this is the whole thing, is that if you can accept that half the time the market's random and you really don't know what's going on, but have the patience to say, I'm just going to stand aside from that. I'm just going to wait till the picture's clear. Doesn't it seem so much nicer and more sensible that you can just wait until you have a clear picture, then to only do your trade setups? Because you can get trades where you have absolute great results like this. All trade setups don't work. Obviously they don't. We've looked at losing trades quite a lot in these webinars, but that's why you have position sizing. So when you're wrong, the loss is kept small, but when you're right, hopefully the profits are large, not just in dollars, but in risk reward units. And that's what we're trying to encompass here with MT Predictor. We're having to have large profits and small losses. The losses will come through. Anyone who says that they're going to make profits all the time just isn't a professional trader. You will make losses, but the trick is keeping those losses small. They're allowing you to run the profits. So I was just quite impressed with those examples on crude that I came across. A prospect was asking about crude oil, so I had a look and I thought, well, actually, pretty good examples there, and they encompass exactly what we want to do at MT Predictor, particularly the W3 Wave 3 trade setup, and then also the VS setup there that also has a high profit potential as well. So are there any questions on that at the moment? Are there any questions on the W3 trade setup in particular? And are you all happy about what we're trying to do with that? Again, just to recap, we come off. Just clear that all off. We come off higher time frame support and resistance. The initial move is wave 1. We then have a minor or lesser degree ABC correction. Sometimes that unfolds on the intermediate degree. This one, it folded on the minor degree. We're looking to catch the wave 2 to then, in a completed 5-wave sequence. I mean, it doesn't always unfold like that. It doesn't always unfold in 5 waves like that. Quite often, the market pattern unfolds and breaks down a bit later here. But ideally, what we're looking to do, we're looking to catch the big swing or a big chunk out of the wave 3 swing, which is typically the strongest and longest in completed 5-wave sequence. That is the whole idea of why I've designed the W3 or wave 3 trade setup, to catch the end of the wave 2 to trade the wave 3. So any questions on that before we perhaps have a quick move on and look at some other markets? As Sylvian said, if MTP is not a black box, why not remove the TS1, TS2, TS3, etc.? Well, they're just labels. That's all they are. They're just labels just to show you there was a trade set up at that particular point in time. We designed it originally because a TS3 is just a simple ABC correction, and a TS1 is an ABC correction as the first correction off the initial move. So a TS1 is in a wave 2. So that's the way it's just started. The labels are just there for just showing you the different trade setups. So we could actually remove the stuff, Sylvan, if you wanted to, but I just think people like to have the labels on there anyway. Particularly then if you've got a scanner, you can see the setup coming in as well. I quite like having the labels on there. I don't know what everyone else thinks. Do you like having the different labels? So it just shows you what kind of setup it is. Particularly if you have like a VS setup or W3 trade setup. I quite like it. Right, let's have a quick look at some other markets. ES has been very interesting. ES has been really choppy and sideways yesterday. I don't know about you, but I really don't like it when the market gaps up like this and just chops sideways all day. It's really horrible. But going back a couple of days to last Thursday, this was an absolute corker. Hopefully you guys got this, because if I go out to the higher time frame chart, take everything off, higher time frame, here it was in around here. That's the last swing into that high. That pivot low is the last pivot low after that sort of chop sideways. So this would be the DP that you'd be using. So you'd have this on your chart in advance as a potential higher time frame support. Look what the market did. It went right down into that level and made the low of the day on Thursday perfectly. So if we come down to the 3-minute chart, that was a lovely example of a VS setup where the market on this very high volume here on that bar broke down below those important psychological lows. It failed to follow through. It then reversed just before rallying the rest of the day. It didn't make it up to the target. Pity that. Sometimes it doesn't. But if you'd come out on close, it'd been a nice 6-hour profit. So that was a lovely example of the VS trade setup a bit from last Thursday. But after that, Friday was really choppy and sideways and horrible. And then yesterday was as well. So this is what I mean about the market's random. You'll get days that are really choppy and horrible, but then within this, you'll get times when the pattern actually unfolds absolutely perfectly. Look at this. This was your level you projected in advance. Came down there, nailed the low, gave you the setup, caught the rally. So, this is absolutely Christmas when it comes through like this. But of course, in between, it's all a bit random. Marion, a TS3 and TS4, if you look at if you send me an email afterwards, I'll send you a PDF that describes them in great detail, Marion. So send me an email, steve@mtpredictor.com. I'll send you the link to having a look at that PDF that goes through in detail what the difference is between a TS3 W3 and a TS4 W3. Rather than me go through it now, the PDF shows you in that details exactly what it is. So drop me an email after the webinar and I'll email that to you. In fact, it's on the website anyway, so for other people who want to see it. So it's there anyway. So yeah, the E-minis were a bit horrible there yesterday. Other markets, Forex. I was looking at the British pound, and the British pound is just chopping sideways and going nowhere really. The euro that we're looking at the other day on the daily chart, we had DP support. The market was going up. That was our next DP resistance. We're a long way from that at the moment. We're in no man's land at the moment. So this is a good example of basically being, in a random pattern. We don't quite know what's going on. After the market reversing that DP perfectly, reversing that DP. Remember that? That was the last swing into the high. There's your DP. It's rallied off that beautifully. So it's all, it's been in an uptrend there for the time. So I've been having a look at some of the Forex markets, and there's very little going on some of the Forex markets at the moment. So not much to show you on those. That's why that crude oil example is probably the best one to look at for today. Let's have a look at the YM for yesterday, because that was interesting. This is a day session only chart. So regular trading hours from 9:30 to 16:15. Nazir, before you ask, I still haven't seen whether TradingView are releasing their day session only charts yet. My contact did say that they're on the way and they're testing, but I haven't seen anything yet for release on that. If they do, it would be great. But what I thought was interesting on the YM is if we go to the higher time frame, there was the last major swing high, wasn't it? So right mouse click there. That's your DP for resistance. Look what the market did yesterday. It did go up and then bang straight into that before backing off sideways. If I look at the NQ, that was just really choppy and horrible. It wasn't really coming off anywhere. If I look at the ES, exactly the same. The high there didn't really come in anything. The low the previous day did come in at DP from that previous pivot. So the low of the day on Friday did come in quite nicely at DP support, but yesterday wasn't really any DP resistance, even though the YM was. So this is sometimes what you get. Sometimes you'll get times when you catch the highs and the lows absolutely perfectly with the DP on one of the E-minis and not necessarily all of them. They don't all necessarily unfold exactly the same, because here you can see the YM gapped up, then chopped sideways. But the NQ rallied slightly and then declined and then went sideways. Here when it's going sideways, if I take a DP off this pivot, it basically banged into DP support and it was going sideways from DP support. But, the markets weren't doing the same thing. This was declining, then going along DP support. This was rallying and then coming off from DP resistance. So sometimes, you do get the markets doing slightly different things. If that happens, then you want to say, well, actually, the picture is not really that clear. So you need to wait until you get something that's actually a lot clearer. Having said that, on the YM, you did get a VS sell set up at the high of the day nicely. Now remember, this one here, this VS sell here would not be a good one to take. First of all, because the MTP trade is blue, but also this was a breach of a minor swing pivot, wasn't it? So this was a minor swing pivot, as opposed to this one that went to new highs just before reversing. So that's more what you want to look at for a VS rather than the one that's breaking a intermediate or sort of mid-trend kind of pivot. So are there any questions in the last couple of minutes of the webinar that you'd like to ask? If you're using NinjaTrader, the same We have the same tools in NinjaTrader as we do in our standalone version, as we do in our TradingView ones as well. Interesting, the markets did have a bit of a sharp decline here fairly recently. These are 15-minute charts of the ES, NQ, and YM, but we have the same setups in our TradingView indicators as well. Right, so are there any questions in the last couple of minutes of the webinar, or is everybody happy on everything that we've seen so far? In particular, the main thing I really wanted to look at was the W3 setup. This was the main thing I wanted to cover in today's session, where the W3 trade setup, this one here, W3 trade setup was to catch the end of a wave 2, to take a trade out of the wave 3. That is normally the strongest and longest move in a completed 1, 2, 3, 4, 5 wave sequence. And we start the whole sequence at higher time frame DP support and resistance. So that's the main training topic for today on what the W3 or wave 3 trade setup is. Leah, we haven't got the ability to place alerts on DP levels as yet. Maybe that might be a feature we'll bring in the future, but at the moment we haven't got alerts for that. The main reason we have them, we just have them on the chart, so they're there visually. But that's what I want to try and get you to do, and hopefully you're trying to get the understanding of this, is we're not trying to be in reaction mode to an alert from a scanner. What we're trying to do is we're trying to project in advance. Do you remember how the start here, I went to the higher time frame chart. I then placed that DP on the chart in advance. It was from that pivot. It was there before the market got there. In other words, before the market got there, we're then anticipating levels to look at to see whether the market is indeed reversing at that level. When it does reverse to that level, then we go down to the shorter time frame chart, i.e. the time frame chart we're looking at to trade. In this example, down from the hourly to the 15-minute, that's when we start to look for our trade setups. That's perhaps when you could have a scanner running. So if you like here, you see here I've got a scanner running on my E-minis. Then you could perhaps have a scanner running to then help alert you to setups that are in the direction of that large degree trend. But you don't react to this. You're only using it when you know what to look for. In other words, when the picture starts to become clear. Now, as we've seen before, markets don't always do what they should do. They don't always behave. That's because markets are random half the time. And that's, again, the most important thing to accept is that why on earth would you want to throw away trade setups like this just for the sake of not being able to accept that markets are random at other times? So that's what we want to do with MT Predictor. We want to sit through the randomness, but accept the markets are random, sit through that time, ready to see when the market does indeed reverse at our anticipated levels. Then we deem the pictures clear, and that's when we start to look for setups. So hopefully that all makes sense. Right, so hopefully today's been a good webinar, and hopefully you've all enjoyed it, in particular looking at the W3 or Wave 3 trade setup. If there are any additional questions, do drop me an email, steve@mtpredictor.com. But we'll be back to do it all again next week, and let's see whether we get some good trade setups in the meantime. But remember, keep those losses small. Losses will unfold. They are inevitable. You always will get losing trades. Keep those losses small. That's where we use position sizing, and try to let your trades run to allow you to catch the larger profits, because that's what we're looking to trying to do with MT Predictors. Small losses, and large profits. That's what we're trying to look to do. So have a good trading week, everybody, and we'll be back to do it all again in a week's time.